Dow Jones Industrials down 455. I want you to look at these images on your screen. These remarkably realistic faces are totally fake and generated by NVIDIA's new artificial intelligence algorithm. Pretty brilliant, right? The chip company's AI program taught itself to mimic the human brain and create incredibly realistic faces with flaws so authentic, it's really hard to tell these people don't even exist. So if AI can teach itself to accurately portray human visages, then what could it do to the markets, and is Wall Street in peril? The Bank for International Settlements, if you don't know what that is, 60 central banks around the world use it as their own banking transaction outfit. It's out with a brand new study saying global stock markets will continue to drop sharply in 2019, naming what will cause the turbulence. Rising interest rates, spiking leveraged loan risk, geopolitical tensions, and the trade war. Not one mention of AI meets algorithmic trading. But sources I spoke to this weekend revealed that artificial intelligence paired with algorithmic or machine-driven trading may have more power to crash the markets than anything else because humans aren't prepared to stop them. Robert Wolf ran UBS Americas for years, and the former banker joins us now. 32 Advisors is your company. What do you make of this?
Well, I'm not surprised that people aren't talking about it because most people aren't aware of it. I mean, our venture company has an AI company, a virtual reality and augmented company, and I'm just learning about it. And so this is really new. But to the markets, it's not as new as we think because everything's about market timing. How fast can you get to the markets before anyone else blinks? And so we have seen this algorithmic trading in the past years really bring fluctuations to the market like we haven't seen. But now with AI, yeah. I think that was a question.
Well, yeah, because
with AI on top of it,
faces on
literally, it's all robotic. You don't have to even think about it.
They're teaching themselves how to make faces that even have flaws. You can see in the hair, the graying of some of it. They look like they were taken off of somebody's iPhone or a Konica camera or something. And that, to me, it's the pairing of algorithmic trading with AI, and AI is learning possibly even how to trick human investors.
Well, we're seeing more money from hedge funds and financial services go into technology than human capital. That's just a fact. Because, like I said, it's all about speed and it's all about getting there first. We used to say on Wall Street, if you're not at the table first, okay, then you're way behind the eight ball. Now it's with technology speed. If you're not at the table first with technology, then you're behind the eight ball. And listen, it sounds exciting, but I will tell you it's scary. Because today, the reason the market is down 450, yes, trade or Fed, but really it's because everyone's going the same way algorithmically.
Okay.
And before, people used to take a step back and they were unsure. Now they're not even thinking. AI is thinking for them.
Which is, I think, disconcerting, because what if AI, and this goes back to 2001: A Space Odyssey, where HAL taught itself how to game out the astronauts. If AI then teaches itself a new language that nobody who even created it understands and figures out how to game the markets, let's just say the humans come in and say, we're going to pull the plug. I don't mean to be black helicopter theorists or anything like that, but what if AI figured out that might happen and figured out an alternative energy source?
Well, it's interesting. You're going to have coming up a kind of little debate on Bitcoin,
yes.
the bulls and the bears. You and I have spoken a lot over the past year about blockchain protocol. Blockchain protocol, one of the reasons I'm bullish on blockchain protocol is because they use decentralized ledgers. Today, everyone's kind of using the same technology and it's feeding the same system. The whole idea of blockchain was to have decentralized ledgers. So if you pull that plug, it only pulls the plug on that one. It doesn't pull the plug on the whole system. And you know, I think we're in a very volatile and nervous time on these fluctuations. That being said, this panic is caused from trade, geopolitical risk, Brexit, France, China trade, the upcoming, debacle that will take place between House Dems and the White House. You can't name all the risks we're going into 2019.
Well, you just didn't mention the Fed. I know it's at the forefront of everybody's mind, and so you just figure it's assumed. But do you think the algos are gearing up to trade off what the Fed does Wednesday?
Absolutely. I mean, by the time we put our finger on the dot, there'll be a zillion trades happening before that. The minute the Fed announces what they're doing, they'll be as quick as they can. But more importantly, it's going to be what they say. The minute they start giving a dovish or hawkish tone, are we going to see something in March? They're already moving quickly.
Okay.
They're one step ahead of us.
Okay, well, maybe we have to get one step ahead
I
of them.
agree with that.
And this conversation was meant to do that, folks, because I got source information this weekend that this is something to be wary of.
Well, Liz, I applaud you, because I think you're thinking of something that really not many people in the marketplace is talking enough about. The more you talk about it, I think the better off we'll all be.
Thank you very much. And again, it's not just algos. It's algos plus AI equals possible mayhem.